Folks, are you looking for stocks that can turn your small investment into life-changing gains? Then this video is definitely for you. Imagine turning a few $100s into thousands, maybe even millions, not through luck but through smart, well-timed decisions. In a market full of noise and hype, finding real opportunities that are backed by solid fundamentals is rare. But when you do find them, they could be absolute gold mines. These are the kinds of stocks that early investors in Tesla, Nvidia, and Moderna once discovered. Companies that looked small at first, but exploded with growth once the world caught on. And right now, there are a handful of under-the-radar penny stocks that could do the same in the coming months. So today, we're diving into 3 penny stocks that have the potential to make you seriously rich. These are not random shots in the dark. These aren't meme stocks or overhyped plays with no real revenue. These are companies with serious backing, disruptive technologies, and the attention of Wall Street analysts who know exactly what to look for. So if you're truly serious about building wealth in the stock market, grab a seat, pay close attention, and watch till the end, because you don't want to miss a second of what's coming. And before we jump in, make sure you smash that subscribe button and turn on notifications so you never miss a hot stock tip, deep dive analysis, or game-changing opportunity. Let's get started. The first on our list is Terns Pharmaceuticals, trading under the ticker TERN on the NASDAQ, currently priced around $4.03 per share. But if you dig into this company's fundamentals, you'll see why analysts believe this number could be dramatically higher in the near future. So, what exactly does Terns Pharmaceuticals do? Terns is a clinical stage biopharmaceutical company focused on developing innovative therapies to treat liver diseases and cancer. What sets them apart is their approach to targeting diseases with high unmet needs, using advanced science to create therapies that are not only effective, but also more convenient for patients. One of their leading assets is a drug called TERN-701, an allosteric BCR-ABL inhibitor being tested for chronic myeloid leukemia. The compound has shown impressive early data, strong efficacy, and good safety, which puts it in a potential best-in-class position. That alone would be exciting, but Terns also has a second major drug in its pipeline, TERN-601, an oral GLP-1 receptor agonist for obesity. And if you've been following the market, you know how hot the weight loss drug space is right now. GLP-1 drugs like Ozempic and Wegovy have made headlines for months, and the demand continues to skyrocket. But where Terns might have an edge is in its dosing. Their approach may lead to fewer side effects and better adherence, something that could make a big difference in the multi-billion-dollar obesity treatment market. Beyond the drug pipeline, let's talk about financial strength. Terns currently has a cash reserve of approximately $334 million. That's a huge deal for a clinical stage biotech because it means they can continue running trials and developing their pipeline without having to go back to the market and dilute shareholder value. In fact, their cash runway is expected to last through 2028. That kind of breathing room gives them flexibility and security, 2 things that are rare for smaller biotechs. Now, despite a 26% drop earlier this year due to increased competition in the weight loss market, investor sentiment remains strong. In just the past few months, 7 different analysts have issued buy ratings on Terns, pointing to the company's innovative approach and strong financials. Recent financial performance also supports the case. In the first quarter of 2025, Terns reported revenue of $2.8 billion with net revenue coming in at $2.5 billion, up 9% and 7% year-over-year, respectively. Much of that growth came from increased equipment and product support revenue. EPS, or earnings per share, came in at 77 cents, which included a 22-cent impairment loss on non-core assets. Excluding that, adjusted EPS was 99 cents, up a solid 18% from the same period last year. EBIT, or earnings before interest and taxes, was $168 million, and adjusted EBIT was $213 million. Their equipment backlog stood at an all-time high of $2.8 billion as of March 31st, 2025. Add to that their recent asset sales, like the $450 million divestiture of 4Refuel and the $40 million sale of Comtech, and it's clear that Terns is streamlining its focus while maintaining a strong balance sheet. And here's the exciting part. Wall Street analysts have set 12-month price targets as high as $20 per share, with an average estimate around $15.63. That's a nearly 300% upside from where the stock is now. Some forecasts go even higher, suggesting the stock could quadruple if clinical trials go as planned. So for investors looking for biotech exposure with multiple near-term catalysts, Terns Pharmaceuticals checks a lot of boxes. Let's talk about our second pick, Hive Digital Technologies. This one trades on the NASDAQ under the ticker Hive and is currently priced at around $1.76. At first glance, you might think of this company as just another crypto miner, but Hive has undergone a transformation that makes it one of the most exciting plays in the digital infrastructure and AI space today. Originally focused on mining Bitcoin, Hive has now pivoted to a broader strategy that includes high-performance computing for artificial intelligence. This shift comes at a time when demand for AI workloads is exploding. Every major tech company in the world is scrambling to build or buy access to GPU-based compute power. That's exactly what Hive is offering: AI-ready, renewable energy-powered data centers. They currently operate over 100 megawatts of capacity, making them one of the few players with the infrastructure to handle enterprise-grade AI processing. This move into AI gives Hive an entirely new addressable market, one that's arguably more stable and predictable than crypto mining alone. From a financial standpoint, things are trending in the right direction. In Q1 2025, Hive reported revenue of $37.1 million, up 29% from the previous quarter. Their Bitcoin mining efficiency improved significantly, thanks to upgraded hardware that helped them achieve 8 exahashes per second in computing capacity. That's a major milestone, especially considering their target is 25 exahashes in the near term. Analysts are taking notice. B. Riley recently initiated coverage on Hive with a buy rating, citing its low-cost power and GPU expansion plans. H.C. Wainwright went even further, giving the stock a price target of $9, more than 5 times the current share price. Let's not ignore the earnings. For Q3 2025, Hive posted an EPS of negative 6 cents, beating the analyst consensus of negative 11 cents. Trailing EPS is currently negative 5 cents. But that number is expected to improve dramatically next year as Hive begins monetizing its AI infrastructure. Forecasts suggest EPS could rise from negative 32 cents to nearly break even, signaling a potential turning point in profitability. The average analyst price target right now is $7.54, with high-end estimates reaching $11. That's more than a 300% gain from today's levels. For investors interested in the intersection of crypto, green energy, and AI computing, Hive is an incredibly attractive high-upside play. Last on our list, but certainly not least, is Corvus Pharmaceuticals. Trading under the ticker CRVS, Corvus is currently priced at around $3.95 per share. This company is another clinical-stage biotech, but unlike Terns, Corvus focuses on immunotherapy, specifically treatments that harness the body's immune system to fight cancer. The lead compound in their pipeline is soquelitinib, a selective ITK inhibitor being tested for T-cell lymphomas. Early phase 1 data has been very encouraging, with a response rate of 38%. That's a big deal in this area of oncology, where treatment options are limited and survival rates are poor. Soquelitinib could become a go-to therapy in a market that's hungry for innovation. Corvus released its Q1 2025 earnings on May 8th, and the results came in right on target. The company reported an EPS of negative 13 cents, matching the consensus estimate. The trailing EPS is negative 98 cents, but projections suggest that will improve next year to negative 49 cents as the company moves into more advanced stages of development. Analysts covering Corvus are bullish. The average 12-month price target is $13, with high estimates hitting $17. That's an upside of over 400% from today's levels. What makes Corvus particularly interesting is its potential for partnership or acquisition. Larger pharmaceutical companies are constantly looking for promising early-stage assets to add to their pipelines, and with positive trial data and a clear market need, Corvus could be on the radar for strategic buyers. While biotech always comes with risk, especially around clinical trials and regulatory timelines, the reward potential here is significant. Well, that concludes our list of 3 explosive penny stocks to watch in 2025. These are companies that don't just trade at low prices. They operate in high-impact sectors with real science, real tech, and the potential for very real returns. Whether it's Terns Pharmaceuticals revolutionizing cancer and obesity treatment, Hive Digital Technologies powering the next generation of AI, or Corvus Pharmaceuticals pushing forward the frontier of immunotherapy. Each of these stocks offers something unique. And if even one of them hits their targets, the returns could be life-changing. So if you're serious about building wealth in the stock market, don't ignore these names. Do your research, stay informed, and, as always, invest wisely. Be sure to hit that subscribe button and turn on notifications so you don't miss future updates on more hot stocks with big potential. Thanks for watching.